Market worries continue whether Deutsche Bank will become the next Credit Suisse. Shares in Deutsche Bank, or Deutsche Bank, fell sharply on Friday after the bank's credit default swaps surged overnight as concerns about the stability of European banks persisted. In the afternoon of the same day, the Frankfurt-listed stock fell 8.6%, and the intraday drop was as high as 14%. It was the company's third straight day of declines, and is down more than 20% so far this month. Deutsche Bank's credit default swaps CDS jumped to 173 basis points late Thursday, from 140 basis points the previous day. Credit default swaps are a form of insurance for corporate bondholders against potential bond defaults. The collapse of Silicon Valley Bank in the United States and the urgent acquisition of Credit Suisse by UBS have aroused investors' concerns about the banking industry in Europe and the United States. Those concerns were exacerbated by further tightening of monetary policy by the Federal Reserve on Wednesday. The Swiss government, global regulators and central banks hope that UBS's bid for Credit Suisse will help stabilize markets. But investors clearly don't see the deal as enough to ease the pressure on the banking sector. Deutsche Bank is located at the center of the German economy. Despite years of downsizing to improve safety, the bank remains a globally important bank with a strong presence on Wall Street in bonds, derivatives and currency trading. It also provides basic services such as lending, treasury management, and corporate accounts to multinational corporations. Some analysts and investors seem baffled by Deutsche Bank being targeted by the market, while it has long been considered one of Europe's most troubled banks. A restructuring launched in 2019 has helped stabilize operations. Unlike Credit Suisse, Deutsche Bank's deposit base has held steady in recent quarters. Deutsche Bank launched a multi-billion euro restructuring in 2019 to reduce costs and improve profitability. Since then, the bank has posted 10 consecutive profitable quarters. Deutsche Bank's net income in 2022 will be €5 billion, about 5.4 billion US dollars, an increase of 159% over the previous year. In addition, the bank's CET1 ratio, a measure of a bank's solvency, at the end of 2022 was 13.4%. Its liquidity coverage ratio was 142%, and its net stable funding ratio was 119%. The figures suggest that there is no reason to worry about the bank's solvency or liquidity position. The market is jittery, it just seems to be looking for a target, said Tatiana G. Rail Castro, portfolio manager at investment firm Musin Ichco. The German government and the European Central Bank rushed to appease the market sentiment. German Chancellor Scholz told a news conference in Brussels on Friday that Deutsche Bank has been thoroughly restructured and modernized its business model and is a very profitable bank. Lagarde, president of the European Central Bank, also stated at the regular end-of-quarter meeting of EU leaders that the Eurozone banking sector is extremely resilient due to its strong capital and liquidity positions and reforms carried out in 2008. The central bank's toolkit can also provide liquidity to the financial system after the announcement of the above-mentioned reassuring remarks. The decline of bank stocks narrowed slightly. Deutsche Bank's German rival Commerzbank halved after falling more than 10%. Societe Generale and Credit Suisse fell 9% before falling nearly 7%. BNP Paribas and Barclays fell 7%. UBS after falling more than 8%. They all fell by about 6%. Like other European banks, Deutsche Bank has been deeply affected by negative interest rates in Europe for many years. When interest rates are close to zero or negative, it is difficult for banks to charge much higher loan fees than deposits, and net interest margins are squeezed for a long time. Deutsche Bank has also been fined by regulators for assisting money laundering in Russia and for holding accounts at the bank by American financier Jeffrey Epstein, who was convicted of sexually assaulting minors. Its asset management unit is also under investigation in the US for allegedly exaggerating the sustainability of its investments. In addition, Deutsche Bank is a major Trump lender and has been caught up in a long-running battle between the former US president and Congress over access to his tax returns. However, investors and regulators basically agree that under the leadership of Christian Sowing, who became CEO in 2018, Deutsche Bank has turned losses into profits. He has scaled back Deutsche Bank's U.S. investment banking operations, cutting costs and focusing on serving the German giant. Unlike Credit Suisse, Deutsche Bank is profitable, and its major litigation issues are mostly a thing of the past, analysts say. Autonomous research strategists Stuart Graham and Leona Lee said in a research note that the stock underperformed simply because there were more compelling stock stories elsewhere in the sector. Silver's viability or asset profile. To be clear, Deutsche Bank is not the next Credit Suisse.